On the face of it, Australia's strong economic figures look to have gone down well with the markets. For his take, I spoke to David Halliday from Macquarie Private Wealth. David Halliday, thanks for joining us.
Not a problem.
Now, no inspiration from Wall Street today on the share market. Was it all down to the surprising strength of the national accounts?
I don't think you can say it was all down to the surprising strength, but it certainly wasn't a large part down to the huge GDP figure that came out today. Obviously, both quarterly and annualised GDP growth was exceptionally strong. It comes on the back of very strong retail sales figures yesterday, and really that was what spurred the market. But having said that, we're up around 50 or 60 points before those figures came out. It really just spurred us up to the next level. I think maybe also there was some element of short covering. The market does feel like it's been a little bit underbid for the last couple of days, and when the stock started rallying, obviously people who were short decided to start covering some of those shorts. And at the same time, we had some manufacturing data in the form of PMI come out from China, and that certainly showed that the Chinese economy isn't slowing as much, at least in the manufacturing sector, as what we might have first thought.
Indeed, the banks and the miners bounced back from yesterday. Is it sustainable?
Well, that's really the $50,000 question. We had an up day Monday, down Tuesday, up again today. Everyone's saying, well, is this whole market thing going to hold? Are we going to have another down day tomorrow? But certainly in the case of the resources, that PMI data, the GDP data, really they were being held back over the past month or two on the back of those double-dip recession concerns and weaker commodity prices. So I think to some extent those fears will be allayed and the resources could in fact go on with it. At the same time, the coalition in betting markets appear to be firming to take government. If that does turn out to be the case, we know that the resources or mining resources rents tax will be scrapped or at least changed dramatically, so some element of that kicking in.
And the ag chemical company New Farm has been dumped by investors. What's behind that?
It's been dumped again. It's not a profit warning this time, which will please some people. This company's got a great history over the past 2 years of releasing profit warning after profit warning. Today, the flavour of the sell-off in the market wasn't to do with a profit warning, it was to do with a blowout in the company's debt. On just the 14th of July, they reported that they expected their debt to sit around the $450 million mark. Today, they came out and said it's going to be something more like $620 million, an increase of $170-odd million over the course of the last 6 weeks. The number of justifications for it, but nonetheless the number has ballooned out pretty dramatically.
And just briefly, Jet Set Travel World has got the go-ahead for its takeover of Stellar Travel Services. Was it a predictable response from the market?
It really was. The shares jumped about 11.5% or 16 or 17% at the close. They were up more throughout the course of the day. All came down to the decision from the ACCC to allow their merger with Stellar Travel Services. Basically, the ACCC cited the fact that competition within the travel and leisure sector is increasing quite heavily, particularly in the online space, and also from direct supply from airlines and hotels and other suppliers. So that was the justification for allowing the merger, but certainly investors welcomed the news and the share price reacted accordingly.
David Halliday, we'll leave it there. Thanks for joining us tonight.
Thank you.